Fadel Gheit, folks, joins us from Oppenheimer and Company. Why are we speaking to Fadel Gheit? Decades of experience looking upstream and downstream at the oil business. Fadel, we just spoke with John Lipsky about economic contraction in Greece. How is oil demand? We're halfway through the year. Is there a demand slowdown globally in oil?
Yes, absolutely. We have seen that year over year, month over month. Oil prices peaked back in April, and we have seen demand destruction. We have seen demand coming down.
Fadel, I want to bring up the price of oil here. We're back a little bit. This is Saudi Light, not Brent, not NYMEX. Bring up long-term view here, if you would, Rex. Chart number 2. And when you look at oil back, we see the collapse of OPEC there in 1986. The price was like 70, 80, and down it went. Is OPEC reaffirmed their strength in the recent weeks?
Well, a couple of things. They could not agree on what to do with their production quota. Saudi Arabia and some of its allies, if you will, basically wanted to increase production by 1 or 2 million barrels a day to try to burst the bubble. They believe that we are getting into a bubble. They believe that oil prices are not supported by industry fundamentals. They believe that the market is well balanced. Supply and demand are basically balanced. They could not justify a $30 increase in oil prices from the last meeting, which was at the middle of December of last year. So they believe that oil prices are inflated by $15 to $20 per barrel, and I do believe that they are correct on this score. And they say that OPEC, the side that didn't want increase output, the Iranian, the Venezuelans, and all these countries, they said that the market is well supplied and we should not increase our quotas. And the reason for that, they don't have additional spare production capacity. Only Saudi Arabia and OPEC that has sizable production, and they can increase production by 1 or 2 million barrels per day. But so far, we have seen 10 to 12% drop in oil prices since the peak. And that also coincided with the $4 gas we have in the U.S. And I was talking to some of the companies this morning, and they have seen month over month demand destruction since April.
Yeah, Fadel, I mean, there's so many distortions in the market. We've talked about Brent versus West Texas Intermediate. Here is Brent oil versus natural gas. It's an elegant chart. The white line is nat gas really going nowhere for 2 years, and there's the boom in oil. Let me ask the dumb question. Is natural gas cheap or is oil expensive?
Both. Natural gas is cheap, oil prices is expensive, but oil prices and gas prices have decoupled many, many years ago. Not very likely they will converge one more time. They are basically dancing to different tunes. We have oversupply in WTI, but doesn't mean that we have oversupply in the global oil market. While natural gas is an oversupply, and this oversupply can increase actually when technology is transferred outside of the U.S., which many of the international oil companies coming into joint venture in this country, they want to learn how we drill horizontal wells, do fracture technology and all these things, and take it to Europe, take it to Asia, take it to elsewhere. So I think you are going to see the disparity between oil and gas prices here to stay.
I mean, it's interesting. Fadel, I mean, I go back to the headlines I'm seeing come across our beautiful HD TV screen here, and, you know, earnings forecast coming in a little bit or views forward. I go back to oil demand in Europe with a crisis that we just saw with John Lipsky, or over here in the United States with 9% unemployment. Is it just, could that be the surprise of this year that oil demand comes off?
Well, a couple of things. The global economy is getting more energy efficient. There is no question in my mind that is happening and will accelerate into the future. And you are going to see more aggressive government action to stimulate and accelerate this energy conservation. Fuel switching and everything else is also taking place. But without global economic growth, I think energy demand will basically be flat or even decline.
What does it mean for Exxon? I brought up their chart, pretty good chart. They bought a natural gas play, but just as the bellwether, where is Exxon 10 and 20 years on? Do we see the same growth explosion we've seen for the last 20 years?
Well, a couple of things. Exxon is not running its business on 2 or 3 or 4 or even 5-year cycles. They are looking at the 15, 20 or 30-year cycle. They are bullish on natural gas because eventually we are going to converge our economy from dependence on oil into more and more into natural gas. After all, we are almost self-sufficient in natural gas, but we import more than half of what we use in oil. There is no likelihood that we are going to cut our energy import, our oil import significantly over the next few years, maybe a decade or two from now. But natural gas, on the other hand, is an oversupply. Technology is ours. We have abundance of natural gas in this country. The question is, do we have the political will to really change our economy to use more gas than oil? And that is the $64 question. So Exxon is betting on that, betting on the future, also because inability to replace oil production outside of the U.S. because national oil companies are getting more greedy, more aggressive, and they say, this technology, I can buy it from the oil service company. And I don't need the Exxon and the Chevron and BP and all these companies.
Let's put up Tom is wrong, because I was wrong. Full disclosure, I was big wrong. Put it up a second time. Marathon Oil. Fadel, thanks for straightening me out. All the stereotypes, boring refiner, not the Marathon you think you know. Marathon's a whole new company, isn't it?
Absolutely. It's a company, in my view, one of the most undervalued and most under-discovered, if you will, oil stories. There's like the elephant disappearing in plain sight. This stock is trading at single-digit multiples of earnings, almost 20 to 40% discount to its peer average. It has one of the highest dividend yields. It has one of the strongest balance sheets. Well, it will split in 2 weeks from now. Part of it, Marathon Petroleum, would be competing with the refining companies, and the Marathon Oil would be trading with the E&P companies.
Fadel, we're going to have to leave it there. MRO, Marathon, study it. Fadel Gheit, thank you.